Hey guys, welcome back to the channel Faith and Forex. May you prosper and be in good health as your soul prospers. Let's go. Alright, so let's look at what's going to be our objectives for this video. So objectives, we just want to look at our projections coming into Thursday of this week and even Friday. Our London session and our New York session. So we're going to look at our projections for gold and GJ. Since I took entries on gold, we're going to look at some bar replay on gold, how we could have entered and what we could have done differently. All right, so we're going to just do a recap on gold as well. All right, so starting off with objective 1, I'm going to start off by recapping gold, and then we look at the projections for each in this coming week. Now, if we should do a bar replay, going back to the point where maybe I just around here I made a video, the video that is now up, or my most recent video, you can go back and check. I'm just going to do a top-down analysis on gold. On the monthly, we are bullish, as you guys can see. First of all, we need to know our overall direction. Monthly, we know that we are bullish. All right, so gold has hit all-time highs only because especially the American economy was shaky, and so gold being the safe haven, many persons ran to gold because of what was happening and some of the news that were coming out with the tariffs and so on. All right, so on the weekly time frame, we are also bullish. All right, and this is going to be, you can actually identify some of these areas. This would be a higher low, which created this higher high. All right, so we have technically here a higher low and so on. All right, this higher low has not yet created a higher high, so it's just a potential higher low. Just bear that in mind. Okay, I just wanted you to see the structure also on the weekly time frame. You want to pay attention to that. On the daily time frame, let's just get down to the daily, which we might see things in a more refined manner. Okay, so we have that new high that was created. We have a higher low, higher high, higher low. This is not necessarily a higher high, but barely, I would say just a retest of the high. Then we have that higher low, potential higher low to give us that push to the upside, creating a higher high. All right, so on the daily time frame, since structure has not broken below the previous higher low, we know that on the daily we are bullish. All right, so the market keeps making highs, 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 and so on. So on the 4-hour time frame, quickly, on the 4-hour, we are also bullish. Actually, gold was consolidating a bit in this area on the 4-hour time frame. However, we can see if we should look at internal structure, gold is trending bullish on the 4-hour, making higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This will perhaps be our higher low, any one of these areas, because these are basically equal lows. So these are, let's say, our potential. This would be my potential higher low that is about to give me that higher high. All right, so for now, I'm just going to mark off this area as my low. All right, so I know that that's my higher low for now. And also I'm going to need a higher high, or what we'll call equal highs for now. All right, so if we're looking at internal structure, that's going to be my higher high. So all I'm going to be looking for in this case are buys, bullish, 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 bullish. All right, so after I've selected my bias for the week, I'm looking for areas of interest. Now, on which time frame do I select my areas of interest? Areas of interest can be selected on daily, 4-hour, or the 1-hour time frame, right? But we do not have that much information on the daily. It's not so clear. Else we would actually have to consider our wicks, because we don't have much movement in this area. All right, just because of how gold has been moving. So what I've done to select my areas of interest, since I'm actually transitioning to swing trade, and maybe I'll do a video on why I think that's best. All right, but for now, we're just going to be looking at our areas of interest on the 4-hour, and I don't just use present data. I go back in the past wherever I see elbows, price wicking into that area, touching that area, 3 or more times, I normally select those areas as areas of interest. All right, so this strong area of interest, by the way, I just want to let you know areas of interest include supply and demand areas, which will coincide with support and resistance. We also want to look at our fib tool, especially what we call the premium area. So these are some of the tools that I use to identify my areas of interest. So I have an area of interest here, and I'm going to mark off so you can see why I'm actually selecting this area. It's strong area of support and resistance. There we go. Another touch was there. There we go. We have several touches in this area, and I don't even need to select all of those areas. You can see that this would have been a potential area of interest. All right, beautiful, beautiful, beautiful. So I'm just going to mark that off as an area of interest or an area of strong support and resistance. Let's select another area just around here where we see 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. And when you select these areas, even if it's not necessarily an area of interest, it is very good to have a prediction. If price responds to certain areas, you know why. All right, and that's because below this area we have sellers being interested, and above we have buyers. All right, so you know that whenever price is below this area where I have my line, as you can see, the sellers always get in the market below this area. Same for here. Anywhere below this line, we always have sellers up in the market, happening in the market, and above we have buyers. So you always want to see price closing above those areas if you're looking for buyers, or if you're looking for sells below those areas. All right, so these are some key areas that I'll mark off as areas of interest, supply and demand. Now I need to narrow down that area of interest. And when I say narrow down, I mean in terms of where am I looking to enter the market. As an intraday trader, I will get down on the 1 hour time frame and look at that. So lovely. As you can see, price responded to this area multiple times. And if you are just mark off those areas. All right, so while I selected areas on the 4 hour, there are also still more refined areas within this particular section that can be selected. And this is one. There we go. We have several touches. I'm just going to mark off this area as a strong area of support and resistance. All right, let me get rid of those. And some of these too. All right, so as you can see, we have several touches in these areas. And normally, I don't really like the yellow for this. I already have a color that I use just to make it a little more, All right, so we have 1, 2, 3, 4, 5, 6, 7 touches. I'm now on the 1 hour time frame looking for more refined entries. Yes, and as you can see, price has come into this area several times. Now let me mark off this area as well as a more refined area on the 1 hour time frame. As you can see, we have 1, 2, 3, 4 touches and so on. Right, so now really what we want to do is we want to identify these areas as well. Let me just mark it off quickly. Let me remove this. All right, so you know that these are more refined areas on the 4 hour time frame. All right, so wonderful. So we have areas of interest, we have strong supply and demand areas. Now I'm going to go deeper, even deeper than that. Now as I'm looking at the market, I see that the market is at an area of support and resistance, and once it's at resistance, we can expect price to push down, which we call sellers are now in the market. You guys may call it resistance, but we also know it as sellers being in the market. Above we have buyers being in the market. All right, so another area we can mark off as well is just around here as a strong area of support and resistance. We do have areas in between, but we don't need to mark off every single point. All right, even here you could mark off here as well to see what price would do around that. All right, so let's just remove those lines. So now on gold, I see this happening in the market. I know this is my higher low, I know this is my higher high, and price is looking to target those areas, right? I want to know, zoom in on what is happening in terms of structure. So when it comes down to my confirmation, the first thing I do, I want to look for a shift of structure, any form of shift of structure. I need to see lower time frame structure coinciding with higher time frame structure. And the first of all, when I looked at this trade, I entered here, I would have seen this. All right, so we were basically in a major consolidation, if we're really being honest. Price hitting against those highs and lows. Let me just make this really almost gray. All right, so we're kind of in a consolidation. Price going to the ceiling, not really breaking above, pushing below, pushing up, pushing below. But what's wonderful about this is that we keep getting higher. The highs keep getting higher and higher and higher. All right, so each time the highs are pushing upwards. Now, when I saw this, I was actually looking at structure. I recognize that I do have my high low, which is not being broken. Just over here, price is actually getting higher and higher. Each time we have a low, it keeps pushing upwards. It's not breaking below 41.68, so that's good for buys. Now, I was looking at the market and I saw where the market was trending downwards. We had that lower low, lower high, lower low, lower high, lower low. Yes? Some of these areas I actually identified as my liquidity points. I knew that liquidity was below here. It was below here and below here. Alright, so we had those trendline traders getting in the market here. Persons would have entered just around here, wait for it to hit the trend line, and we waited again just around here for those who trade trend lines to hit the trend line. We see that green candlestick, we said, okay, yes, we have support and resistance, it's now a chance to enter and all of that. And what does the market do? It pushes below and takes out all of this liquidity. Alright, so at the time, couple days, this was a few days ago, on Friday, last Friday, I was looking at the market and I saw this, right? Never took any trades though. Alright, so when it got down here, I recognized that, okay, liquidity is taken out. Once liquidity is taken out, this low is still being respected at 41.65. There is a possibility for price to push upwards. Now, did we see that push upwards? Yes. We had that lower low, lower high, lower low, lower high, lower low, and then we had that break of structure. As you can see here, if we should pull this out, we had a clear break of structure where this was our previous higher low. This was our previous, lower high that was taken out. Alright, so what the market did know, for those who trade Fibonacci at premium levels, which I do. However, there's something very important I also use for confirmations, and that's going to be liquidity. I need to see liquidity, and I need to see manipulation. Alright, I normally call it inducement. And I'm going to show you what that means. This is something that's very, very critical for your trading, that you need to put in you need to consider it in the complete package of your trading. You cannot be trading without considering liquidity and also the market manipulating persons who are looking to enter. You must bear these in mind. Alright, so I would have gotten my fib tool, which I still use, but now I have in the back of my mind manipulation. I have induced. Those are in the back of my mind, even though I use my fib tool. So I saw the fib tool and I recognize that there's a possibility for price to get to the 50% or the 61.8. What did price do? Exactly that. Alright, so price got exactly into that area, which is at the 61.8%. Boom. Well, as we can see, because I already know that the market is expecting traders to enter here, hoping that price breaks this ceiling or breaks this resistance area, I knew the market was going to pull back. So what I did, I entered for a short-term sell. Alright, so I did enter somewhere around here. and my TP was below that sweep. I think I got a 1 to 2. I think I did enter. I don't remember exactly, but there was an entry here. All right, because I know price is moving downward to sweep the liquidity within the 61.8%, because many persons would have entered. No, this would have been over here. My bad. So price actually got into the 50%. All right, so I know price was expecting to sweep back down to take out all those persons, and that's exactly what happened. All right, I didn't get stopped out. Don't worry, guys. I didn't get stopped out. I just don't remember where I placed it. All right, it was a quick 1 to 2, and price got down to that area. All right, so once price got into that area, this is where I made the mistake. I knew there was a possibility that price would have pushed up after sweeping the liquidity below that area, but then there was something I missed. All right, so I'm just going to highlight that quickly so you guys can see it. So once the liquidity was swept, I blindly entered the market, which is not really a bad idea. I blindly entered. I don't think, was this where? I blindly entered the market where news was coming out. I was getting a 1 to 3. As I said, I don't remember, but I got stopped out on this only because I assumed, again, I had in the back of my mind that price would possibly come back into this area of demand. All right, so this was unmitigated. This was unmitigated demand. So I did have an idea that, look, price may get back into that area of unmitigated demand, but I was not paying attention. All right, so what I should have done was exit the trade as soon as it got to this area, which is a strong area of support and resistance. You can never assume that price will break an area of support or resistance. All right, never assume that price will break an area of support or resistance. You still have to think about it as though price won't break it. All right, so let's see what happened. We had price pushing into that area. I think I'm going to be going back. Leave. Let's start new. I think I need to, right there. I think it was somewhere around here. All right, so we got a week. I think we got a week. Let me just go a little slower. We got a week into this area. Well, that's really slow. Yeah, so that's what I'm talking about. So price wicked into the area. Oh, you're feeling so lovely. Then news came out. Price pushed all the way back into this area of demand, giving us another manipulation, another inducement, because I want you guys to pay attention. Inducement also happens, which in my last video I pointed that out. I said to myself, I don't like these equal lows that are being forming. All right, that are being formed. So when you have many like equal lows, look at that, 1, 2, 3. Many persons will say, as soon as it gets back to this area of support, I'm buying. But what does the market do? It takes out that stop loss you had below these areas, swept it clean, got back into this area of unmitigated demand, and then pushed to the upside. All right, so that's what we talk about when we say that the market will induce, will manipulate, it will trick you into thinking that this is what is going to happen, and then it goes against you. So whenever you see a trend line, whenever you see equal lows, whenever you see double bottom, whenever you see double top, those areas are areas where the market, or the big heads in the market, for here would actually be the sellers or the buyers. They push market down, putting high volume in the market, working against retail traders, and then they get to enter their lovely buy positions with no opposition. All right, so that's the idea. It got into this area of demand, which I did point out in the last video. I said I'm concerned that gold is going to break below and get into this area of demand. But guess what? I re-entered the trade as soon as I saw that wick being formed just around here, and I'm still in that trade. I'm going to be telling you what I suspect will happen. I might be wrong, all right, but this was my entry, and I am currently in for a long position. I entered 2 positions, because remember that I told you guys that if price gets into 42.16, you could enter. I did enter 42.16 as well. I closed that position though, but I'm still in this position. After price got into the demand area, I caught it just like that. Alright, so even though I was stopped out, price did return for another inducement, which should not have caught me off guard, because I saw all of these equal lows stringing all along, all the way across, which means that persons who trade supply and support and resistance, these are their entries. All of their entries were swept, and then gold pushed to the upside. Alright, so those are some things you want to pay attention to. Trend line, you want to pay attention to equal lows, you want to pay attention to Fibonacci retracement levels. I use those, but I don't use them blindly anymore. I use them having in the back of my mind that there is a possibility that once the market knows that persons are interested in those specific areas, they are going to try to go against you. Now, are there cases when inducement or manipulation happens once? Sometimes it always liquidity is swept, but not too much inducement. I've seen it before. All right, but you still want to keep an open eye, especially on a pair like gold, which is very volatile. Now, what do I think is going to happen? I'm going to keep it very, very simple. Let's just get out of bar replay. Let's leave. We're going to keep it very simple. Gold, we're going to look for our area of interest. We're still bullish. That is it. I'm looking for my area of interest. Let me just get these off. So currently what will happen to gold coming into Thursday? Gold is looking for liquidity areas, which is... Alright, so for gold, this is my area of interest, really. It might not even get back too far into this area. So this is my area of interest. I don't have 2 area of interest or 3, just 1. Alright, so this is going to be my area of interest. Let me remove these. I think I had a second one. I'm going to include a second area of interest. Alright, just in case. All of these are gone. That's in the past. Lovely, lovely. Bye-bye. Thank you for my entry area of demand. Lovely. We're no longer there. So we're looking to just create highs. Now, this area of interest is not bad at all. We do not have a strong area of demand except over here. We have demand here. Wonderful. Next question. Do we have liquidity? Yes, liquidity was below here, just where we had that elbow, that buy, sell, and then buy, which has been swept. Just below there. Alright, so I do think that all I need to see now is like candlestick formation pattern coming into the London session, keeping it very, very simple. That's all I need to see. Highs going higher and higher, candlestick formation patterns, and then I'm going in for those buys. Even if it pushes back a little further, I'm not going to be too stringent with my area of interest, not going to be too strict on it, because what I'm really looking for is demand area. Now I'm looking for liquidity being swept. I'm looking for strong support and resistance, which all of this area here could be considered as such. So I'm just pairing liquidity. I'm pairing liquidity with any form of possible manipulation. I'm pairing all of those together, which means that price swept once, we might see another push further down to take out liquidity once more. Once I see like the candlestick formation pattern, I see the shift of structure, because right now if we should go down on lower time frames, we have a break of structure. All right, so as you can see, it is now bearish on the 5 minute. We just need for the pair to get back bullish, and then we can enter our buys. All right, so that's it for gold. Nothing too extra. All I'm waiting for around in and around this area is the shift of structure to go bullish, candlestick formation pattern, just to enter another position. All right, that's it. Shift of structure, candlestick formation pattern. I might just insert my MA at the 1 hour. Also the EMA, there we go. Once it crosses, It's now over the EMA, so the EMA is not to be considered so much. I'm not overthinking this trade at all. I do have a position right. I have a running position down here, all right, as we speak, and so I'm just looking to enter another position. Again, we're not sure if it's going to break this area of resistance. We could see gold pushing even as far back as all the way into this area of demand before we see a push to the upside. All right, so that's possible that gold will push or may push to take out this liquidity below that wick. Well, not quite, it's not really quite liquidity. No, I'm not going to even consider that. Yeah, there has to be a sell, then a buy for liquidity for me, so I'm going to remove that. All right, I'm just keeping an eye out for shift of structure and so on to take buys anywhere around area of interest 1. Area of interest 2 is possible. I'll just keep it there, but I'm not really looking into that so much, because if I had stick to the plan, my gut feeling about price coming into that demand area would have been perfectly fine. All right, but that's the idea for gold. I hope you would have learned something new today. I'm trying my best to provide as much value as I possibly can. Gbpjpy, not doing much today. The idea remains the same. We're getting that break. Not quite yet. We're just into this area of extreme demand. We want to see price closing below this 1 hour lower, higher low, closing below, and maybe we could check for any form of inducements or anything happening around this area. I had a trend line here, just wondering if price would actually sweep the liquidity below, so I drew this trend line, not for entries. I don't use trend line for entries. If anything, I use it for the opposite. All right, so it depends on the type of trader you are. It works for some persons. All right, so we could see some form of pushback after that close below, and our target remains 207 for GJ. Hopefully, I always want to identify some nice liquidity areas, and so we have some liquidity areas above here. All right, see a liquidity area being formed here. So when it comes on to the New York or the London session, please pay attention to those areas before you enter the market. All right, so once it closes below, or if it closes below, you want to pay attention to price even pushing as high as this area here, sweeping that liquidity, and then you get that big push to the downside. So that's my prediction for GJ. That's what I'm looking at. I might take short-term sells, really hoping that it gets into 207, then we can get those big buys into 210.5, which is a target. It may not be hit for this week as we are seeing, but perhaps next week. All right, so we are out of session now as I'm creating this video, but I hope I did create a lot of value, provide a lot of value. Thank you guys so much for the love and support. I'll see you in the next video. Peace.